Hello viewers, in this video I'll be going over the S&P 500, ETF ticker symbol SPY. We are up around 46 basis points and we still have about 3 hours left in trading. On the 1 hour chart we are on a positive on the MACD, and on the 4 hour chart I do see the 4 hour MACD turning positive as well, and we could possibly end up closing higher over the weekend if there's positive news on the G20 trade talks with China. And for resistance, it is the all-time high that we left back in last week. So I do see, well, it's a binary outcome over this weekend, so really anything could happen. And for support, if we do close lower and there's bad news, I do see the 50-day moving average as a pretty good support. Reason why: the 50-day coincides with a concentration of price levels around this range, so that is around the price of 287.77 cents. So if we were to get positive news on the talks over the weekend, that price movement is roughly around 1.2% move up, making another all-time high. And if we were to get negative news, that price movement is around 1.7% move down. And onto the next module, I'll compare today's current trend right here with this trend that dated back to September 24th, 2012 to December 20th, 2012. I'll point out why these two charts are similar. So what we have in the current chart, we started off above the middle Bollinger Band. So we have this trend here, and then we proceeded to go down lower and down channel. It's this one. So we proceeded lower, and then we quickly reverse and touch the upper Bollinger Band right here. And we will be a green circle, and for here we started off with on the positive on above the middle Bollinger Band, and then we proceeded to gradually fall down and then rapidly towards the end, and then we quickly reverse to touch the upper Bollinger Band right here. So what we have is 1, 2, 3 points, and also 1, 2, 3 points that are similar. So there's reason to believe that the trends and patterns are the same. The outcome and forecast would also be the same. So let's head to the forecast model. So we'll be looking at September 24th, 2012 to December 20th, 2012 right here. So 1 day out, 2 days out, 3 days out, 4 days out, 5 days out, 6 days out, and 7 days out. So back then, the S&P 500 was roughly around 57 basis points. So even though there was a sharp drop in the first 4 days, it still recovered. So even if we do get bad news over the weekend, we may get a sharp drop and even a recovery back to where it was today. So there is a possible, it is possible that may happen as it occurred in the past. And here's the line chart that coincides with the current pattern, current trend right here, and the 2012 trend right here. So that is all. If you enjoyed this content, feel free to like, subscribe, and thank you for watching.